Hey everyone, and welcome back to the channel. Today we're diving deep into a topic that is reshaping the financial landscape, the massive shift happening in US trade policy and what it means for the global economic order. If you're an investor, a business owner, or just someone trying to understand where the world economy is headed, stick around because the changes we're seeing right now are fundamental. For decades, the global system was defined by hyperglobalization, led largely by the United States, championing free trade and integrated supply chains. But that era is undeniably over. We are now witnessing a definitive move toward economic nationalism and what many analysts are calling friend-shoring or de-risking. This isn't just about tariffs, it's about a complete re-evaluation of who we trade with and how vulnerable our economies are to geopolitical shocks. The core driver here is the escalating tension between major economic blocs, particularly between the US and China. This geopolitical friction is spilling directly into trade and investment decisions, creating what I call the geopolitical risk premium. Investors are no longer just looking at profit margins or market size. They are critically assessing the stability of trade relationships and the potential for sudden policy changes. Think about it. 5 years ago, building the cheapest product meant sourcing materials from wherever labor was cheapest. Today, the priority is resilience and security. Companies are willing to pay more to ensure their supply chains don't run through politically sensitive regions. This is creating a major bifurcation in global trade patterns. We are seeing regional hubs becoming more dominant, and the once monolithic global supply chain is fragmenting into distinct, less interconnected networks. This fragmentation has serious implications for everyone. For emerging markets that relied heavily on globalized manufacturing, the pathway to growth is becoming narrower. For developed economies, it means higher production costs and inflationary pressure, as efficiency is sacrificed for security. We're moving from just-in-time inventory systems back toward just-in-case. Now, let's talk about the specific impact on investment confidence. When trade rules are constantly in flux and the threat of sanctions or sudden regulatory changes looms, capital becomes cautious. Foreign direct investment, which is crucial for long-term growth, is slowing down in many areas previously considered safe bets. Investors prefer stability, and right now, the rules of the global economic game are being rewritten in real time, often without clear predictability. Consider the recent emphasis on strategic industries, like semiconductors, clean energy technology, and artificial intelligence. Governments, especially the US, are using industrial policy tools, massive subsidies and export controls to bolster domestic capabilities and restrict access for rivals. This isn't just competition, it's economic warfare played out through regulation. This directly impacts companies and investors who operate across these high-tech borders. If you're invested in a semiconductor company, you are now highly exposed to the decisions made in Washington and Beijing, decisions that can shift market access overnight. Furthermore, these shifts are impacting global institutions. Organizations like the World Trade Organization, which were created to govern the era of globalization, are struggling to enforce rules when major players are prioritizing national security over established trade norms. This weakening of multilateralism means future trade disputes are more likely to be resolved through bilateral pressure or unilateral action, adding yet another layer of risk. So, how do you navigate this new environment? First, diversify your risk geographically. Reliance on single, politically sensitive markets is dangerous. Second, focus on companies that prioritize supply chain resilience and have successfully localized their production or sourced from politically neutral territories. And third, stay highly informed about policy changes. In this new world order, political analysis is just as important as financial analysis. The shift in US trade and the resulting fragmentation of the global economy are not temporary trends, they are structural changes. We are leaving the age of seamless global integration and entering an age defined by competition, security, and regional blocs. Understanding this pivot is absolutely essential for surviving and thriving in the modern investment climate. What are your thoughts on this economic restructuring? Are you seeing this play out in your own investments or business? Let me know in the comments below. If you found this discussion helpful, please hit that like button, subscribe for more in-depth analysis, and ring the notification bell so you don't miss our next video. Thanks for watching, and I'll see you next time.